Welcome back, everyone, to our monthly tactical portfolio update for May 2025. As always, I'm Michael LeBlanc, Senior Portfolio Manager with LLC Private Wealth at CG Wealth Management. We bring you our latest insights into the economic landscape and our tactical approach in our portfolios. Obviously, May has been an exciting month. We've seen a lot of reversal of the damage done by the tariffs back in April, with a lot of back and forth going on between gold and currency as they battle for performance here. But let's jump into all the details and take a look at what's going on. As always, with these videos are for information purposes only. If you have any questions about your portfolios or you wanted more information about what we do, as always, reach out. We'd love to hear from you guys. We're happy to help with looking at some of your other portfolios or strategies or financial plan, whatever it might need. You can reach us at our website. The easiest one to go to is mikeonmoney.com or llcprivatewealth.ca. And as always, you'll find our contact information down below. So here in Canada, the economy it's navigating these turbulent waters pretty well. The projected growth for the Canadian GDP for 2025 is 1%. We've actually seen here in May it was about 2.2 on an annualized basis, a little bit higher than what was expected. But there's a lot of potential for some contraction coming up in the second quarter here. The trade tensions continue, obviously, that's top of the headlines, particularly with everything that's going on in the US. And there's some dampening consumer spending. You know, people are holding back a little bit, especially big ticket items. And businesses, they're getting a little bit tighter with the purse strings when it comes to investment these days, with that uncertainty overhanging the tariff situation globally, not just here in Canada. So that's been continued to go on. Obviously, though, the TSX index has surged almost 16% since its lows in April, reaching new highs, which is great for Canada. A lot of that's been driven by gold. Excuse me. A lot of that's been driven by gold, as I mentioned. We've seen gold continue to rally. It's been great in the portfolio. We've had it for coming up on almost 2 years. We've had a couple of positions, and they continue to really outperform in the portfolios. However, analysts is anticipating a bit slower gains in the next couple of months, mostly due to that strain again from the U.S. tariffs, as companies try to figure things out, especially big export items like steel, aluminum, and autos. Obviously, autos have been in the forefront of the news. Everyone talking about potential whether plants are going to shut down here in Canada. They're going to open new plants in the US, and also with the car parts, a lot of the car part manufacturing back and forth between Canada and the US border, and how many times they might be hit with those tariffs if they continue. May has also been a pretty significant month of volatility down south as well. The S&P obviously experienced a huge sharp decline in April. We talked about it in last month's video with the sweeping tariffs coming in. Obviously, with a lot of that being put on hold or rolled back, we've seen some rallies down there. Not as strong as up here in Canada because the global uncertainty is overhanging the US a lot more. But that being said, the S&P closed trading yesterday, May 30th, May 29th, roughly around 5,900 for the benchmark. So it's had a good bounce back as well. As I said, not as strong as the TSX, but the TSX obviously being more energy and mining focused, it took advantage of those gold surges that we've seen. The Canadian dollar slipped a little bit in May after gaining some ground in April. It's holding around the 72, 73 cents, so still doing better than it was at the beginning of the year, the end of last year. And again, most of that is being driven by that U.S. economic concerns. May did have slightly better outlook for the U.S. because a lot of those big tariffs were rolled back. Some of those new deals that they've been striking Obviously there was a deal announced with the UK, which really wasn't a big deal. It was pretty narrow, actually. But of course, it's all about press and media. It has nothing to do with what's actually being done. And Canada, a lot of the big tariffs for Canada being rolled back, or at least put on hold. So as that continues, that's going to be the kind of the big impact right now. The big negotiations going on is between U.S. and China, and U.S. and the EU or Europe, and so far not a lot of headway on those. A lot of media around it, but no real numbers out there to say what that's going to look like. But we do expect the Bank of Canada to continue to hold the benchmark steady at 2.75, just because inflation did rise a little bit in April, and I think they're taking a bit of a wait and see what everything's going to look like. Of course, new Prime Minister here in Canada, Mark Carney, took over. He's tackling the big challenge ahead. Obviously, as the U.S. relationship is the big item on the agenda. He's emphasized and strengthened the national unity and deregulating some of the interprovincial trades to try to bolster the Canadian economy, where it's being impacted by slower U.S. exports. If you're looking for some more guidance on the markets, really pay attention to the U.S. bond market. It's been dictating things pretty much for the last couple of months. There's been a lot of volatility there as those tariffs are weighing on the global sentiment on the U.S. auction. So as they're auctioning off their debt, they're rolling over debt, treasury bills down there. We're really seeing more and more volatility, and the market's reaction right in line with the direction of that bond market. So keep a close eye on that as we continue through this kind of big area of trade uncertainty, but it's really a mirror of the global sentiment towards the U.S. And the strength of its economy right now. Looking ahead, investors should be bracing for more continued volatility. Just off those factors, we're still concerned over inflationary pressures in the United States. Obviously, central bank decisions have been on hold, as we mentioned, in Canada and also in the U.S. As everyone's kind of in a wait and see pattern. So as we continue with those uncertainties, we're going to see more volatility and we're going to see more negativity than I think than rallies, especially through the slower summer months. Despite all these headwinds, Canada's markets, as I mentioned, have shown some resilience. So let's talk about the portfolios. First of all, I want to bring your attention. So, I always talk about our main tactical portfolios, and we have all those different risk profiles that we tailor make to people's individual risk. I've mentioned in the past, of course, we have our all cap portfolio, which is a bit more aggressive all equity portfolio. It's for people with longer term strategies and can weather through periods of volatility like this. It's continued to hold in and doing quite strong as well. But we've just recently launched, and when I say launched, we've officially launched the portfolio as our new Canadian small cap portfolio. And this is headed by my business partner, Harold Leishman, of course, the other L in the LLC. Harold's been actually or been an advisor and building this particular portfolio for more than 30 years. But we officially launched it as one of our managed portfolios this year. So you can hear more and more about that. This focuses on small cap Canadian companies. These uses a lot of, or pretty much all the same type of due diligence that we do on our tactical portfolios, and the same approaches we take in the tactical portfolio. Looking for companies with strong cash flows, looking for companies with can take advantage of growth catalysts, but just on a larger or a higher multiple scale because of their small size that they're starting off with. So if you're interested in small cap and you're looking for portfolios with more potential returns, it does carry more risk. Of course, we're talking about smaller companies. But if you're looking for more information on that, reach out to us. Harold will happily talk to you about what's going on in those portfolios and how you might be able to take advantage of that as part of your mix. So just wanted to bring that out. But the portfolios themselves, despite the recent bounce back in the markets, we still continue to hold a good, strong cash position in the portfolios. And we're using that to take advantage of the volatility that's out there. Last month's video was titled, "How do you take advantage of volatility?" This is how you do it. You have cash. Cash is king in these situations. So when we see big, strong rallies in some of our names, we're trimming. We're not getting rid of positions. We're trimming out some of those profits, and we're using that cash to turn around when we see weakness. We're topping up some of those names. So we haven't really added any new names to the portfolio. We've just been playing with the weightings around some of the names. We're still focused on the defensive sectors. We really like consumer staples. We've topped up our Aliments Couche-Tard, which is grocery stores in the portfolio. We topped up power companies. We like utilities. Again, a good strong defensive sector, and that's worked out really great in the portfolio. And we continue to see really strong cash flow yields out of our covered call strategies around the utilities and the Canadian financials. So all that has added to the portfolio. Unfortunately, I don't have any numbers to quote in this month's video because I'm filming this on May 31st, so we don't officially have the numbers until the end of the month ends. But if you go to our website, llcprivatewealth.ca, and you look under insights, you'll see our monthly sheets the first week of June, and you'll see the returns for the month of June there. So they'll be up by the time this video goes out. I'm just filming a little bit earlier. So with that, I'm going to sign off. As I mentioned, the Canadian small cap portfolio, if you're interested, reach out to us. That's not going to be on the website for a bit. If you're not familiar, we have to have the portfolio running for a full year before we can publish those numbers. But we can talk about it. If you have specific questions, we can talk about what's going on in there and what the portfolio is doing. We just can't publish the performance numbers until we have a full year of it officially running. But as I said, one-on-one, we're happy to discuss what it would look like if you were interested into that. So as always, go to the website, reach out to us, email us, phone us. Happy to answer any of your questions. Stay tuned to our web channel. We have a new video by Harold coming out on Momentum Gold. So a really good piece, and we're also putting out our monthly piece. And Julian was just down in Louisiana doing a site visit on one of our positions in the small cap portfolio called McCoy. So he will have some updates on that as well. So if you want more on that, our monthly piece is coming out next week, and it will have a lot more details around that. So with that, thanks again, everyone. Have a great month of June, and we'll talk to you at the end. Take care.